for joining us on another session of Block Chat on the brief. Today we have a very special guest, and all our guests are very special. You're used to that by now. Our guest today is Kieran Mesquita. He's a very distinguished individual who started looking at Bitcoin 2009. Am I right, Kieran? It was 2009, yeah?
Yep.
A chief scientist at Railgun. He's someone who've worked for all of this time. You were 11 at that time, Kieran?
Around that age, yes.
11. So I was just chatting to Dennis prior to us coming on air, and I said, you know what? I have a 7-ish year old son. Imagine that my son in 3 years would be on the first mailing list for a crypto mailing list and will get the Bitcoin white paper. Why would he? Kieran, I've heard much and I've seen much while researching more about you and what you've done in the past. I respect too many things you've done, and we'll talk about it today. Yet tell me, please, again, why would you? Why would you be, other than you had very few friends at that time, as I've heard in some interviews, why would you have that interest in blockchain at that time?
I mean, so blockchain specifically is just, most of it was just for the memes, honestly. I mean, I had no value at the time, so it was just a bunch of people sending around random magic internet money bits to each other, so just seemed cool. I mean, obviously I didn't really recognize where it would be in 10 years time, or 12 years now. Wow. 12 years time, but yeah, it's panned out pretty well.
Yeah. Okay. So today, guys, what you've probably noticed is that we skipped our usual introduction. I tried to keep the introduction very short with Denis Petrovicic and Makram Hani on the brief to see how much interaction will we have, and to hopefully not have people drop off when we say Denis Petrovicic and Makram Hani, hearing our names. So today we have someone who's very special and very interesting. You know, you've started working on GPUs a very long time ago, and GPUs, for people who know, are part of the machine that's used for mining, yeah? Tell me more about that, please, and then we'll dive into very interesting subjects today, similar to privacy, your understanding of privacy today, because I believe that the younger generation has an understanding of privacy different to the generations that have passed. Maintaining privacy while staying within the compliance space and sphere and parameters. At the same time, we would like to talk about what do you see projects that are interesting today? What do you see projects that may be interesting today to everyone but are expected to fail? And why would you see? So I'm sure you see holes in some projects that are globally well received today. We'll talk about those and much more. But first, please tell me, what have you done in the past with mining and with other projects that you've been part of? Because I've seen also that you've been part of multiple projects, and some of them are pretty interesting. Go ahead, please.
Yeah, so the first crypto-related code that I've written was So I'll go back a little bit further. So the first thing that I ever did related to crypto was I had a small 11-inch MacBook Air that was used for school purposes, but overnight I'd load up a CPU miner on it and mine Bitcoin. Later on, ended up putting together a desktop rig from secondhand parts. So it had a 4850 in there. It's a Radeon card. And started mining on that. Obviously, parents started to realize that I was doing something at that point because the electricity bill went through the roof.
What year was that? What year was that, Kieran?
Yes, that would have been late 2010.
So 2010, you were 12?
Yes. Yeah.
Sure.
All
So
right.
at 12, you
12 years
started
old.
working on. So 2010, 12, you were mining Bitcoin, I expect here, yeah?
Yeah, I mean, there wasn't really anything else to mine.
Okay, so if
I
you're mining
guess
Bitcoin, what
there's a
was the
bunch of
value of Bitcoin by then?
well, if it had a value at the time I started mining, it was definitely less than cent, like fractions.
And have you used all your Bitcoins, or have you kept some of the ones that are mined by then?
I wish I had kept some of those coins.
I noticed that you spend much of crypto. So, as you mentioned in one of your interviews, you walk the talk, yeah. So you spend much of your crypto, and probably you spent most of the bitcoins that you've done, or all of them, as it seems, that you've mined at that time. Okay, so your parents started realizing that the electricity bill started hiking. What happened next?
So electricity bill goes up. Ended up striking a deal with my dad, saying, I'll mine these coins and then sell them, and then we can split it 50-50. So I went through a couple of iterations on the mining rig, got a couple of new cards, so moved up to 5850, then 6930, 6990, and eventually onto the 7950, which was so that was the last mining rig that I had at that point. So with GPU mining, I could kind of keep up and be competitive because a lot of it was, okay, you get commodity hardware and then you can get a competitive edge by optimizing the software, finding ways to get more hash rate out of it, and so on. So I was able to stay competitive there. But as soon as FPGAs and then ASICs came out, that's it's a completely different ball game. That's you got to find relationships with hardware manufacturers and all, and try and get yourself the hardware before anyone else. So that's something that I couldn't compete in anymore. So I ended up taking a step back from mining at that point. I had mined on a couple of other chains, so Litecoin, Solidcoin being a couple of them. Solidcoin I think was the first crypto rug pull. So got burnt out on that. I was a huge Solidcoin fan. Well, specifically for the long tail emission schedule that it had, but I guess that didn't really count for anything. Yeah, so 2014, thereabouts, kind of stepped back from mining for a bit.
Were you at school at that time? Yeah, you were at school at that time.
Yeah, it would have been high school.
High school, okay. By the way, just a second, Dennis, you've mined before. What time was it? What year was it?
No, I never did. I learned about Bitcoin in 2011, but it was the same time when I started a restaurant, and the crisis was showing in the economy, and so I needed to save a business, not figure out how to mine magic money.
So this is how much belief it takes to go ahead and do that. But I believe at 12 or 13, you had all the belief in the world, yeah?
Well, I mean, I just saw a way to mine some coins, initially it was I'd mined some coins, and I found some guy. You familiar with the game Second Life?
Yeah.
I'm familiar. I haven't played it. It's not my days, but I heard about it several times from guests and from friends.
Yeah, so for people watching, it's sort of the OG metaverse game, right? You could create a character and buy a little plot of land and code up these little mini games and all that people could go and play. I mean, most of it was just people that would create virtual casinos in there, but it had this in-game currency called Linden dollars that ended up sort of acting as a pseudo internet money in some places. So I found someone that would sell me Bitcoin or buy my Bitcoin for Linden dollars, and then I'd be able to take the Linden dollars and sell those for like fiat, and I'd take the fiat and I'd take it down to the corner store and buy various chocolates and all the things that 12-year-olds into. So
I definitely don't believe that you were into all the things that 12-year-olds have been into. I hope I was into that at 12. And then I ate all the chocolate in the world. It's not a problem. So what have you done after you discovered that mining days are long gone?
Yeah, after mining ended, I sort of took a bit of a step back for a while. I think the kind of block size debates were just starting to heat up in Bitcoin at that time. So a lot of people kind of know the block size debate as something that just sort of happened in 2017 when the Bitcoin Cash split happened. But this kind of the beginnings of it go all the way back to 2012, and it really kicked into high gear in 2014. So I was looking at all of that, and people were getting pretty riled up at each other. So I took a step back for a few years and decided to come back in 2016, 2017 again. I recalled going to a meetup locally where people were kind of talking about the Ethereum ICO, and was currently ongoing at the time. And I was looking at that and saying, well, I've gone through the whole 2014, like 2012 to 2014 pre-mine craze, and like these guys want to pre-mine a coin and sell it. I mean, there's no way that this could succeed. So very wrong. So it missed out on Ethereum, unfortunately. But after that started to take off.
Do you believe you missed out on Ethereum, by the way?
Well, I had the opportunity to get into the ICO, and I missed out on it.
Okay. Now I understand. What do you mean by missed out?
So, yeah, 2016, 2017, I took another look at it, and I was like, oh, this is actually going somewhere. So I came back to, I started working a bit more on crypto again. Like, oops, did my...
No,
oh.
We're hearing you. All is good.
Everything's fine.
Yeah, my headset just died for a sec. All right. Yeah, so 2016, 2017, came back and took a proper look at this whole Ethereum thing. And, I sort of looked at it and was like, okay, actually, there is something different here. It's probably something I should get familiar with. So I dove in, started writing a couple of hobby projects in Ethereum, got familiar with the EVM or virtual machine that it uses, and had found a couple of points where it could be improved and all, and kind of worked on some toy projects for myself. Didn't really end up going anywhere for that at that point. And then 2017, I joined Blockbox, which is where I met a mutual friend of ours
Julia,
that introduced us.
Our CMO, Julia. Yeah.
Yes. Okay. She's your CMO. That's all right. Yeah. So that's where I met Julia, and how I got invited to come onto this episode. So yeah, that took me up until 2017. Kind of 2018, 2019, had a bit of an unfortunate run. I was working on going back to 2012-ish, I was a fan of this coin called Prime Coin, because what it would do is, right now, essentially, Bitcoin proof of work is intentionally wasteful, right? So the output of the hashing it only has one use, and it's to build or add more blocks to the blockchain. You can't take the output of the Bitcoin hashing algorithm and use it for anything else. I mean, yeah, people are going to be pedantic about it, but practically, right? You can't sell it. So Yeah. What Primecoin was a coin where it would take the way that you mined blocks was generating large primes, and I believe that like to this day the world record for the largest prime is still one that was mined by Primecoin. I might be wrong; it might have been broken, but they definitely held the record there for a while. Um, and the one of the properties about prime numbers is it's literally just a number, right? So um, there's not really much that you can do. Oh, well, yeah, it's just a number, and you're revealing it publicly on the blockchain because you're mining. So there's not really much that you can do in the way of monetizing it, but it's still useful for cryptography research. So it has this benefit where you still get the same properties as Bitcoin's proof of work in the way that you can't resell the work that you're doing and potentially break the incentive mechanism that makes proof of work mining secure. But you're also contributing back to the field of cryptography, which is what all these cryptocurrencies are based on. So that was a project that I was very enthusiastic about, and so 2018, 2019, I started working on another project in a similar vein. So it was it basically the way that you mined it was to work on computational fluid dynamics jobs, and
here,
so
while
CFD
you capture
calculations
this thought, I want to tell everyone listening two things. First, the rest of the session will not be this technical, I promise you. We'll try to simplify it as much as possible for everyone. Second, we're going on this because I'm, to be honest, fascinated with this, because this, to me, is the history of a young genius in blockchain, and now we'll come to other stuff that you've done at a very young age, and still very young, and this fascinates me because if you understand the generation that's coming up, you understand much of the potential and the challenges, and you understand the theories, you understand standardization possibilities and all of those. Sorry for interrupting your thought. You can continue from 2018.
Yeah, so 2018, I got the opportunity to build another similar project. So it would use computational fluid dynamics as the work algorithm. Again, it's another thing that's very difficult to compute, but easy to verify. People are familiar with the Navier-Stokes equations. That's essentially the proof of work equations that you would solve in order to build on blocks, and the randomness would be supplied by a hash of the transactions or a Merkle tree, and then the root hash is the randomness that gets applied to the CFD calculations. So that's essentially what working on 2018, 2019.
I believe at that time, I believe that project you're talking about is Hex.
Yes,
I'm so proud of you, I would say. I don't know the whole history, but while researching you, I am super intrigued and proud by a young gentleman behind a project who pulls out of it because he feels that the ethic behind the business does not match his beliefs. Where did Hex go after that?
Yeah, I mean, I guess so. The project was named CFD Token at the time, and it went through a couple of iterations on the name, but eventually it did end up getting renamed to Hex. But as it was iterating on the name, it was also iterating on its purpose, and until like we kind of it started to lose the innovations that it was building, and things were getting stripped out of the goal, until eventually I was looking at this and I'm like, well, this is completely
not what I'm
indistinguishable Yeah, it's indistinguishable from the original thing that we set out to build, and I think in the way that that it's being presented now, it's if not a scam, it's very close to being a scam. So
Okay.
I stepped back from the project at that point and publicly stated my reasons why. So I don't particularly want to go back into those, but
Sure.
I think there's plenty of places on the internet where you
now
can.
There's a new project you're involved in, right? You mentioned it just before going on air.
Railgun, I believe, is the new project you're on, yeah? And that's the project you jumped on immediately after 2018, yeah?
No, I actually I started working with this group called Unity Chain for a while. So they were kind of a blockchain R&D shop or a blockchain R&D lab. So they'd essentially had me working on a novel consensus mechanism. I can't really get into the details there for reasons, but
we don't need to.
Sure.
So Railgun, what are you doing at Railgun today?
All right, so a couple of projects later, Railgun, been with the Railgun gal for about a year and a half now. So Railgun's a privacy preserving protocol for smart contract chains. So essentially, if you look at the state of privacy protocols nowadays, you get mixers and you get separate chains that are built to be private, right? So you get you'll have things like Zcash and Monero and all, and those tend to be fairly private. But the downside of that is they don't have any DeFi protocols on them, and even if they were to add DeFi, it ends up being you end up with the problem of so the DeFi protocols that get added. Like you got to bootstrap liquidity, you got to bootstrap this whole ecosystem and all. But we've got things on, like we've got ecosystems like Ethereum and Solana now and Polkadot and so on, which already have a lot of economic activity. But the privacy protocols that exist there are basically just mixes, right? So you can take ETH or like ERC20 tokens or whatever, you deposit in them, you deposit them into the mixer, leave them for a while, and then withdraw. And the use cases for that are fairly limited. So what Railgun does is it essentially lets you take ETH or ERC20 tokens, or on Binance Chain, Binance and BEP20. So pick your chain. You can put them into a private balance in Railgun. So at that point, you've essentially gotten the same sort of properties that a mixer has. Then you can transact them internally. So that takes it a step further than mixers. You start to get to Zcash and Monero levels of functionality. And the final thing is you can take the transactions and encode arbitrary smart contract calls to other contracts on Ethereum. So you could say do a Railgun transaction and encode a call to Uniswap. So if you've got DAI in Railgun, you could encode a call to Uniswap, say, sell my DAI and buy ETH, and you get ETH back into your private balance. So now you essentially got access to the full range of DeFi protocols on Ethereum. You can interact with them privately, and that's like for me that's sort of the holy grail of privacy, right? You've got a system where the DeFi protocols are still open, so you can kind of verify that, say, like Aave, if it's lending out coins, and it's only ever meant to lend out like it's only ever meant to lend out at like a 2x collateralization ratio, right? So if it ends up lending out more than it's meant to, then you can look at the code on chain, and or you see the contract state on chain, and you can say, well, that's broken. Can we figure out why it's broken? If you have everything private, you lose that auditability standard. But you still, it's still like you still need privacy for the end user. So the kind of balance that Railgun strikes there is, you keep the user's activity private, but you leave the DeFi protocols open so they can still be audited.
Perfect. Before I ask you about
Do
your...
you think, Markham,
ahead,
can I
please.
ask something here?
Yeah.
Because it's not controversial, but I think, like, where do you see the most use case? Like, for normal people, I guess, that are involved in DeFi, it seems private enough, right? In a way. But do you see the usage of what you're building with Railgun kind of going more into, when we hear there was a hack, which was not really a hack, but it was like an exploit of an economic, I would say, a sequence on a protocol, and then what you've built, being used to kind of receive that privacy by that hacker itself. Do you think this is like a functionality that is more interesting to that segment of DeFi? Or
So first of all, I guess I'd like to address one of the statements that you made earlier in the question, right? So you said that DeFi is private enough for most people. I think that's rooted in a misconception in the way that blockchains work. So just because something has, if you look at a block explorer, you don't see Kai made this transaction. You see 0xABC made this transaction. And that seems private on like first glance, but it's pseudonymity. And the problem with that is all of the activity that you've done is stored against that identifier for all time. So it only takes one slip up in order for you to associate everything that you've ever done with your identity. And that's like, okay, I can be really careful for the next 10 years, but after that, I really needed to take gas to another wallet that I have like publicly posted, and like I send the ETH over. Oh, oops! Now everyone knows that 0xABC is me.
So in other words, you're saying it gives a fake feeling or sense of privacy to the average user.
Yeah, exactly. So I think a lot of people are too comfortable with the level of privacy that they perceive. I don't think that actual privacy is there. So, I think moving towards like the main use case for Railgun really is just moving just the average DeFi user over into a more private way of interacting with things. And the two hurdles there are, one, making sure that people are aware of exactly how unprivate they are at the moment, and two, making it easy enough or easy to use things in a private manner. So that kind of comes down to the UX side of using Railgun.
Sorry, so let me ask you a question here. So in a simple, non-technical terms, how do you see an average user, and why would you see they would use Railgun? Is it to make them more private so that a hacker or somebody who wants to abuse their online presence and financials cannot do so, or any other reason?
So there's a number of reasons that you'd want to remain private, right? So one, you don't want people to know that, oh, this address has a large amount of ETH.
Okay.
Let's target them. And then you can watch, oh, they're paying for conference tickets with this address. I know what conference they're going to be at. And rock up to the conference and hit them with a wrench.
Cool.
So there's things like that you really don't want to you don't want to happen.
So in other words, it's what you're saying. Let me explain this in my eyes in a non-technical way. What you're saying is, today it's as if you're posting every single thing and transaction you do in life and in your bank on social media. So as if you take your Facebook or your LinkedIn, and every time you do a transaction, be it $1, be it 100, be it a million, you post that transaction as it is, your detailed statement. What you're saying is this is what we're doing today on blockchain.
Oh, yeah, exactly. And
perfect. So what you're saying now is that we are less private on blockchain today than we are on in our regular life and our regular interaction with the economic world, isn't it?
Yeah, I mean, like our bank account is like they're not private at all, right? Like the bank has access to everything.
But at least it's non-private to the bank. But what you're telling me is on-chain.
It's only non-private to the bank.
Exactly.
But, like if you're on a blockchain, it's like, okay, well, the bank has access to it because they can see the blockchain. Everyone else in the world has access to it because they can see the blockchain.
Ooh.
Like it's a whole nother level of openness.
Wow. Okay, so you're telling me the future, if we continue doing what we're doing today, any of us, it's similar to us having everything that so everyone out there who feels that they're private and who feels that they're secure, it's similar to him living and posting his bank statements every month on Facebook and not hiding anything of them. It's exactly that, yeah? In a non-technical term. Okay, it's shocking and it's serious. I didn't know that, by the way. I'm just getting to know it now. I'll come back to you and I want to ask you and understand from you, but you've answered part of it, your definition of privacy. However, let me go to Dennis for a second and say the following. Dennis, what we're building today at Blocksquare and Ocean Point, do you feel that Kieran and the generation that started with Kieran are target market for us? And do you feel that over the coming few years, when this generation becomes the millionaires and billionaires of the future, or of that day, we are their solution to access real estate?
Well, I don't know. I don't know if we are the solution for that, but we are definitely aspiring to make real estate more accessible, especially more accessible for people who are building wealth in DeFi and Web3. So, you know, it's the shortest route to make an investment. I don't think that the younger generations will be investing with the same methods that your generation or my generation has been investing, or, you know, our fathers and mothers. And so, I don't know, I think, yeah, the question of privacy is, you know, that's why I said that question, is because sometimes people would say, you know, oh, this doesn't affect me. But what you've, you know, explained is exactly what is happening. Everything is open. It's transparent, and you put well, Makram, saying, you know, it's like posting my transactions, you know, my bank statement on Facebook, basically, or on Instagram, you know, every month. And probably nobody's going to care about those transactions in most cases, except when somebody does care. And at that moment, it might be a very big liability. And as Kieran put, you know, that is there forever. It's not like, you know, the history of transactions that you've made, you know, you can just, you know, write it away or make it disappear. It's never going to disappear. It's always going to be there. So the methodologies of examining those transactions are going to evolve, and, you know, with it, it's going to be easier and easier to track activity. And that's, I think, something what you're building is, you know, meant for a wider range of users, and not just, you know, the typical thought, first thing you say, you know, it's, oh, this is just for those hackers that go get away with millions, you know. It's not, definitely not for them, it's for everybody else. Although it might be used as well from, you know, a party like this. In terms of real estate tokenization, we, you know, Makram, we have this huge limitations of what we need to achieve and accomplish in the eyes of governments. because it's a real world asset that has to follow real world economics and tax obligations and all of it. And with it, tax filings require identification of users. Now, that makes, it utilizes the pseudo-anonymity on chain that can be enhanced with a protocol like Railgun. But on the same side, it still has this limitation of transferability of those tokens. So it's not tokenized real estate. It's hard to be fully compatible with DeFi in the most basic state, where a token represents economic rights from a specific real estate asset, and the transfer function has to be limited to a whitelist of users that have identified themselves, so that there's this reporting ability by the issuer. So there's things that are not compatible, but I think what we're doing on Ocean Point makes it compatible with DeFi, and I think protocols with privacy, like Kieran mentioned. I think this is definitely something that our users might use as well.
Dennis?
And that's the beauty of Web3, is basically where each of us is building something that we believe is important, but in the end it goes together and it's compatible together, and it makes, it enhances 2-3 projects, maybe each separately, are not as powerful or all combined. And that's, I think, the power of Web3 is that it's kind of guerrilla style of building the web, or rebuilding the web, and it comes from bottom up. Even though we see a lot of projects being financed from top down, but that's another thing.
Dennis, we always talk about standardization, and I read one of Kieran's articles, and he also is talking about making sure that there is, in a way or another, common standards that we all look at and understand. Let's see here if we can create a common standard of the definition of privacy. What's your definition, Dennis, of privacy?
Oh, that's a hard one.
Let me tell you what's my definition and then come back to you.
Yeah, you go first.
So, and this is what I wanted to tell Kieran. Today, for me, I don't mind that the government and all governments have access to everything I do. Okay? I don't feel that I'm not living in my right to have a private life if I allow a government and government organizations to have that, as long as there's proper governance and whatever data they collect, they use the right way, which, yes, somebody can tell me may be abused at a time, but hopefully with time, with AI, with machine learning, with more governance, with more processes, the abuse of power should be less possible. So to me, that is not a breach of privacy. To me, Google knowing everywhere I go is not a breach of privacy. That's, to me, that's in my eyes. So I do not mind that Google understands everything I do. I do not mind that an encrypted central or decentralized system anywhere in the world understands in an encrypted manner everything I do, from my financial dealings to my business dealings to my social dealings to everything in my life. To me, all of this is not a breach of my privacy. Now, it is a breach of my privacy to me if you are able to, for example, utilize this data or publicize it in an unencrypted manner. That's, to me, a breach of privacy. Yet a government entity having it I don't mind that. I mind that my son's friend at school can see that, analyze it his own way, and reflect on my son. That's what I mind. So that's my, and I'm sure everyone is in the world now will say, what? Are you serious? This is my definition of privacy. Let me listen to Dennis's definition of privacy, and then I'll come to you with your definition of privacy. Dennis, what is your definition of privacy?
Well, privacy is it's a funny word. I think like having 3 kids, wife, family, right? I think this puts the privacy perspective in or the privacy issue in a different perspective. I think privacy is about maybe I don't have the definition, but having the ability to control privacy. That's, I think, an important thing. So, if you are able to control which information is made available publicly and which is not, I think that's important. What you're mentioning about governments and different entities knowing about, certain stuff that I might deem private, I think it's not a problem until it is. We had wars in the past, we had genocides, we had stuff that happened because the stuff that should have been private or that should have been not important became important to a nation or a political side. And it was blocking the ability for that person or that family to live peacefully or to live at all. And you don't know what triggers. You might, nobody thought that, there would be a genocide in World War II, for instance. Nobody thought probably 100 years before that. So I think privacy is...
So what you're saying, Dennis, here is that as long as you have a choice to decide what goes out, what doesn't, you don't feel a breach of your privacy, yeah? But I'm also hearing on the other side that I will lock it all. If I have a choice, I will lock it all, yeah?
Well, as long as I'm able to transact, I have my freedoms in a way, or freedoms. I have my rights. I can exercise my rights because today everything we do is related to monetary transactions. So if I'm not able to pay for the internet, I don't have a voice. If I'm not able to pay for transportation, I cannot, move somewhere else. There's things that I cannot do if I cannot transact. Now, if my privacy is used for me to disable my ability to transact, I lose all my rights. So I think privacy and it has this meaning, and then when we take it into the context of blockchain and finance, I think that's where kind of Web3 is trying to go, to build a financial ecosystem where everybody can transact and thus exercise their rights. And even if their privacy is compromised, which it will be for sure, that's a given, I think, they will still be able to transact and fight against, with their rights in a way.
So what you're saying in a way or another is the right, your humanity is at risk whenever your privacy on the internet today is at risk. This is what you're saying.
In a way, yes.
Okay. Kieran, how would you define privacy today?
So I think privacy is the right of an individual to reveal and not reveal parts of their life to people that they choose. So between me and my doctor, I choose to reveal my medical information to my doctor. Right, I get benefit from that, of course, because I get treatment. If I catch a cold or whatever, they can give me like Panadol. I don't know. Pick your example, right? for a reason that you go to a doctor. But that information that I shared with my doctor, because I choose to have that part of my life, that should only be accessible to my doctor. It should, if I want to choose to reveal my financial data to someone, say for like compliance or auditing purposes, I should be able to do that. But it should only go to the person that I want to reveal it to, right? So that ability to choose what parts of your life are accessible to who is what I believe is privacy.
Perfect. Cool. So in other words, what you're saying is it's only a matter of choice. Approximately what Dennis is also saying. It's a matter of choice. So as long as you have the choice, and I believe I agree with it. Yeah, the only parties that I don't mind can have access to everything, which I believe they do, by the way, are the government and Google. So and that's cool, as long as the other everyone else in the world has access only to what you choose to share with them. What you're telling me here, to go back to Railgun and the scary thought that you've given us today, we're using blockchain in a way where it's similar to posting everything about our life on Facebook. So Railgun is a screen, is a level of choice where you utilize your system to choose what to reflect where your identity is kept private. However, you're compliant. So in one of the recent articles that I've read for you on Cointelegraph, you've talked about that. Can you tell me more, please, about it? Can you tell me more about how do you get private while compliant? Because I am all about compliance, and I believe Dennis is all about compliance. How do you do that?
Yeah, so Railgun has the ability to generate like verifiable reports of transactions, or you can hand out a view key that people can use to view your activity if you want to. So it's not that all of your transaction data is hidden forever and it'll never be revealed whenever, but it's not by default public. You choose who you want to reveal your transaction details to, and you choose what details you want to reveal to them. So if the tax office comes knocking and says, "Hey, we notice you've been transacting in Railgun, prove to us that you've been paying all your taxes," I can go and create a report saying, "Yeah, here's a report of my transactions," and they can say, "Oh, okay, cool. You paid the right amount of taxes. You're good to go." Right? So that's that ability is there within Railgun. It's just it's a user-led action rather than default public.
Perfect. So here you're telling me that you're giving people the choice, and they can choose to reveal whatever they want to people. So in other words, it allows you and Dennis and me, because I agree with the definitions you've put together, the choice to reveal what you want to reveal.
Yep.
To the party you want to reveal it to. Perfect. Here we come to something very interesting. I'll start with Dennis, and then I'll go to you, Kieran. Dennis, what do you believe are projects that are very prominent now? Because everyone is talking today about projects that will fail, projects that are not supported by a proper economy, projects that are not supported by proper tech, projects that are not audited properly, projects. So there's much here to talk about. What do you believe are projects that are very prominent today that will fail, or you see holes in, that if not covered will fail?
This is a very hard topic to talk about.
It is, and it is a hard topic, and it's probably a critical and a sensitive topic as well, because it's yeah,
especially when you're building something yourself, right? We're all builders here on the show, and it's always hard to be critical, critique some other builder. So I won't I will not.
You will not.
No,
Let's see
sorry.
if Kieran will.
Because
Kieran, do
but
you have?
what I will
Yes,
say
sir.
is what I'll say is that things work out and they don't. So, and there's ups and downs, and if whatever you're building, you're gonna have ups and downs, and it's not about how you deal with the ups. That's something that most people can do. It's how you go through the downs, and the downs are not just you might have a great blueprint, but I was shit happens, and teams fall apart, investors flee away, they come back, or so things fail for a number of reasons, as we all know. I'm not sure what projects might fail, because honestly, I don't follow that much outside of what is directly important to me. But in my view, we have a couple of very solid projects around that we can kind of rely on. And one where we rely on a lot is Ethereum. And it has risks. It's a risky, thing, but in a world of crypto, risk is everywhere, and you need to pick your horses. And we're sticking with Ethereum so far, even though, because I think that using L2s is way more risky for real world assets. If we would be doing like a game or something like that, then you rather spend less on transactions, I would say. But what we're doing is people's lives. We're directly impacting somebody's life and his savings and his real estate, and this should be the best option at hand, and that's why we're sticking with Ethereum so far. But yeah, I'm
So
not.
you'll not give a name, but I'll get a name out of you in a second.
Yeah.
So,
Yeah.
or at least I'll get a definition to what project would fail, because again, there's many projects. Nobody knows what projects will fail or succeed. Otherwise, he would be the ultimate investor in the world, and he will pick the only ones that will succeed and invest in them. However, there is usually identifiable elements of a project that tell you those guys are going the wrong direction. Now, they may succeed, they may turn it around, and you may be wrong. No one of us has a final, definite truth or claims it. Yet, there is points, and I believe it may be helpful for builders if somebody or many people point out a risk or point out an issue that they see from their end. Kieran, give me, if you wish, or if you can, projects that you see today are prominent, however you see elements, if not dealt with, may fail.
Yeah. I'm not going to call out a specific project, but again, yeah, Dennis did state that there are multiple reasons that a project could fail and could succeed. So there's a lot of factors that are going into it. But I think from a technical perspective, projects need to be more honest about the trade-offs that they're making, because everything that we're doing in DeFi now, right? This isn't the publication of the Bitcoin white paper that's like full on groundbreaking. Very few projects in DeFi are game-changing kind of publications or innovations like the Bitcoin white paper was. It's an iterative design process that we're moving through now, and like I look at Railgun, right? So there's a lot of different competing privacy protocols, and I support those privacy protocols because I think it's important to explore the design space and figure out where the trade-offs that need to be made, and it's very difficult to pick what those trade-offs are ahead of time. The problem that I see with a lot of projects is they'll go off and they'll say, well, we've made the perfect project, it's groundbreaking, and they're not honest about the trade-offs. And that can be pretty dangerous because, there's a number of, let's say, Ethereum killers, right, that have gone out and said, well, we've broken the consensus, whatever, and, we've got, we solved the trilemma, and it's going to be amazing, and everything will be cheap forever, and then they have to hold their blockchain because something went wrong, right? So there's that's the sort of problem that arises when you're not honest about the trade-offs. Going back to privacy, there's I think the projects that I probably admire the most in the space, probably besides Railgun, of course, like the Secret Network and Aztec. I think they're both legitimate competitors to Railgun. Secret kind of has the downside of being SGX based, and so they have some security trade-offs there. And they're off on their own chains. They got to bootstrap the whole DeFi ecosystem and move economic energy over to it. So that's a pretty big roadblock. Looking at Aztec, their whole solution was to move to a layer 2. So while interacting within a layer 2 can be fairly cheap and very quick, in order to get transaction finality, you need to wait till the rollup window is committed back to Ethereum, and that. And if you wanted to interact with any DeFi protocols that are on Ethereum, you can still access that liquidity. It's just going to take a long time because you got to wait for the rollup window. So speed is sort of the drawback that Aztec makes, and then Railgun, of course, is kind of optimized to be as private as possible and as have native access to Ethereum, so you get the same execution speed. But the downside on Railgun is it's going to be more compute intensive and it's going to be more gas intensive. So generating transactions on Railgun take a few seconds on a mobile device. I believe that the delay there is short enough that it's worth it. That's not going to inconvenience user, but if you wanted to use Railgun in, say, a use case where you wanted to embed a Railgun wallet into an IoT device, you'd be waiting for a couple of minutes for a transaction to be generated in an IoT device, right? So there's trade-offs in every project, and I think we need to see a bit more honesty in where those trade-offs are, why the particular design decisions that were made in order to get that project going were made, right? What the rationale for those were. And I think the hallmark of a good project from a technical perspective is the ability for them to be honest about that. It's a pretty big red flag for me when a project just goes out and says, well, we've made some groundbreaking leap in whatever, and what we're doing is perfect in every way.
I hear you here, because we've chosen at Blocksquare we've done the same choice. We use Ethereum. We haven't gone for a layer 2, higher costs, but as Dennis said, we prefer to use a much solid ecosystem. We prefer to, and especially with what we're dealing with, it's people's life assets and people's life savings. So you want something that's tried and tried and tried, and this is why. Dennis, do you have any question to Kieran?
If so you've done 10, 12 years basically in blockchain, right? In crypto. Let's add another 10 years to it. What are your thoughts?
Yeah, that is a difficult question, right? Because even like you look, just kind of looking back at the things that I've been involved in, right? 2010, it was, or 2008, 2009, it was just like Bitcoin in its infancy or not even launched yet. And it's like, okay, that's just looking at some memes and sending around funny numbers, right? Then, right, 2012 to 2010 to 2012, it's like, okay, maybe I can afford to go and buy a chocolate bar every now and then off this. 2012, 2014, it's like, well, got a whole bunch of random clone coins. There's a couple of people that are it's I guess 2012 to 2014 was a different but a similar phase to what we got now, but in a different design space. People were trading over blockchain designs and hashing algorithms and so on, and look into the incentives there. Whereas now we're kind of iterating over DeFi. Well, yeah, we've been iterating over DeFi primitives for the last couple of years, but similar atmosphere. So, 2017, we got ICO boom, and people were iterating over. Now we got DeFi primitives. So, like even over the last 10 years, it's not that the space has changed rapidly in the last 10 years. That I wouldn't be able to pick out where I'm now. It's like I can't pick out where we're going to be in 2 years, because every 2 years we seem to have a new cycle, and people are iterating in a different design space. So I'd hope that the pace of innovation that we're seeing continues to keep up, and we keep exploring the design possibilities and breaking new frontiers. But I couldn't tell you what frontiers we'll be breaking in 10 years.
So let me try to answer the question that I've asked you guys. And I've asked the question obviously because today everyone is talking about projects that are failing and projects that will fail. And again, some fail because of wrong reasons or sometimes right reasons. Now, the subject of stable coins come out every time we talk about this within the past week or so. Now, and for an obvious reason, what happened with Luna and UST. I believe that projects or stable coins get the element of stability to their name from the underlying. So if you have a stable coin where the underlying is not stable, what is the stability derived of? How can you relay an element of stability and peg it to a fiat currency if what you're backing it up with has no kind of stability with the fiat currency? And this question is to both. And let's start with Dennis. How can you call a coin stable when it's not backed by a stable underlying asset, be it real estate, be it fiat, be it a bag of commodities and real estate and fiat? How can you call an algorithmic stable coin stable when it's backed by and probably under collateralized a cryptocurrency that is in general by nature fluctuating in value with big giant parameters? Dennis, what do you feel?
It might be a question for somebody who's been researching stable coins and more than I have. I did my fair share of research so far, but I mean, the MakerDAO ecosystem has so far, I would say, proven that it has created a design that can have supposed stability over the fluctuation of cryptocurrencies like Ether. And it's, I would say, pretty close to what a stablecoin should be in terms of decentralization as of a structure and in terms of stability. Even though stability, it's something that is not actually true. It doesn't actually exist. Even in traditional finance, there's a lot of fluctuation happening, especially in the last 2 years. We've seen moves that will impact our economies for the next 10 years. And, there's actually no stability, the US dollar or euro or whatever fiat currency you pick. There's inflation present at all times. So I think.
But when there's a peg, Dennis.
I think it's like what I would say, because you mentioned Luna, is I don't know where the pressure came at one point that this needs to grow faster than it should. But the pace of growth maybe was quicker than it should have been. If you look at MakerDAO, it's a project that started basically when the Ethereum ICO was announced, almost. So it's something that has been, in the making for a long time. And Luna is a 4-year-old project where it's actually live, 2 years now, I think. And if those kind of stress tests would be done at a lower scale, it might have even succeeded, because they would create a new iteration of the design that would, but I guess the thought was probably pressure from investors, I don't know who, is that it needs to grow faster, and sometimes
pressure from the market that's hyped, probably, yeah.
Level. Sorry?
Pressure from the market that's hyped, and if you don't win, you don't exist in a way or other.
Yeah, I don't know the team behind it that well enough. I just saw maybe some comments of Do Kwon, who I found from those comments to be quite arrogant in his approach, but it doesn't mean that that's who he is. I don't know him, so and maybe it was watching.
It was a reaction to probably something that's aggressive that's happening against them, which is most human beings will reply in an arrogant or defensive or aggressive manner. Yeah.
Yeah, but it was like comments from before, from like a month, 2 months ago or something, right? So, and yeah, doesn't, I think acting responsibly and trying to kind of, for instance, what we're doing has this legal document, the corporate resolution, which is grounds for transferring economic rights to a token. Like one of the things we should do is basically sue ourselves in court, try it out, try to see how the court would rule it. That would be a responsible thing to do. And
mock trial.
Try to oppose.
Exactly.
Yeah, try to oppose what we're preaching, and in this way find potential issues before they are found out at mass and before it hurts a lot of people. It's better to hurt a couple of people than yeah.
Kieran, what's your view to that?
Yeah, I think this actually does tie into the trade-off in design space point that I brought up earlier, right? So, you've got Luna and UST, that whole ecosystem there, and I think that there was there's an issue. There was an issue there about every algorithmic stablecoin is going to have a point where if you push it too much, it's going to lose its peg. So even DAI will have that point. And it turned out that the design decisions that were put into Luna meant that the point at which it lost its peg was a lot more reachable than people would have liked. And there's other aspects of the ecosystem like Anchor protocol and so on, which started to probably put out unsustainable yields and all, which compounded that issue. But that whole thing does come down to right that people weren't honest about where the breaking point of UST was. That meant that UST was allowed to grow to a point where it hit that breaking point without having the proper backing there, and it depegged catastrophically. So that's sort of what I'll say about that. And I think sort of looking at other stable coins and evaluating whether
they're stable enough,
whether they remain stable, is to look at okay, well, what are the design decisions made in this particular stable coin? What's the under what conditions can it sustain certain amounts of market cap, and what's the breaking point there, and kind of evaluate whether we're going to use it or not, or allow people to evaluate whether they're going to use it or not, based on what the risk parameters of the system are. But we need to make sure that
transparency in trade-offs, and exactly what you've mentioned before, because I believe the expectations that you built for people is what makes people's experience good or bad, yeah? And as you said, every peg can fall apart. Every peg of a currency, even of a country today. There's many countries that peg their currency to the US dollars. There's many currencies that peg their currency to a bag of currencies with euro and USD in it. And that currency peg usually costs the country, or makes the country money, but usually costs the country all through the year to maintain that peg, to maintain that stability of exchange rate. And that costs money. And if you push it so far, yes, it will fall apart. And when you don't have enough reserves to support it, and as you mentioned, probably with Luna and UTC, you did not have the UST, sorry, you did not have enough reserves to support, and the breaking point was nearer than people expected and would have hoped. Very interesting conversation with you today, Kieran. Is there something you would like to, or you would have liked to be asked today and you weren't? And is there something you would like to tell our community and everyone who will see us?
No, I think we've covered a good number of things over in the interview, so I'm pretty happy with what we've got.
Dennis, tell me your...
Thank you, Kieran. I'd like to thank Kieran for taking the time to join us to Blockchat today, and hope we'll have a chance in our lifetime to meet in person as well.
That's something we hope with many people around us. Unfortunately, those days, as it seems, that's not happening so often. I would like to thank you, Kieran, so much for the time and for the knowledge. And I would tell you, I'm impressed. I'm so happy to have met you today. We can talk for hours. I wouldn't understand much of what you would say, probably, when you go technical. However, I love the clarity of knowledge, clarity of vision that you do have, which rarely do people possess. At the same time, the ability to understand the world out there. And you taught me something today, which is fascinating to me. I'm going out of this block chat with something totally different. Today, everyone is posting all their financial transactions on the internet, on Facebook, and this is imminent, guys. Kieran, thank you so much. Guys, thank you for all who've attended today. It's again Dennis Petrovicic and Makrim Hani on this session on Block Chat. Thank you. Have a good day.